This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Getting hotter. The economy is expanding. Home prices are hitting records. Confidence is climbing. And one Fed policymaker says the case is strengthening for a rate hike.
Prescription for reform. Donald Trump picks a vocal critic of Obamacare for his cabinet, signaling an aggressive overhaul of that landmark health law.
Deal or no deal? What happens if OPEC does not reach an agreement to cut oil output? We'll soon find out. Those stories and more tonight on Nightly Business Report for Tuesday, November 29th.
Good evening, everyone, and welcome. We begin tonight with the economy and new reports today that show a pickup in momentum. Growth, the broadest measure of U.S. output, is finally picking up. Gross domestic product expanded in the third quarter, ending September 30th, at an annual rate of 3.2%. That's its strongest growth in 2 years, helped by solid consumer spending. The report also showed that corporate profits rebounded for a third straight quarter. Separately, there was a surge in consumer confidence this month. Closely watched index rose to a 9-year high, and expectations for the next 6 months were the most optimistic since June of last year. Later this week comes the jobs report, which most economists think will show a nation at or close to full employment. The bottom line, the U.S. economy, for all the campaign trail hand-wringing, is a far cry from where it stood when the White House last changed occupants. And that's not all. Home prices at the national level are higher than ever before. Diana Olick takes a look at that key pillar of the economy.
Home price gains are gaining and by one measure just hit a new record. The much-watched S&P CoreLogic Case-Shiller National Home Price Index surpassed its last peak, which was in 2006 at the height of the last housing boom. Low supply and high demand are fueling competition, which in turn fuels prices. Home prices in September jumped 5.5% annually. That's bigger than the 5.1% gain in August. And that again is a national record. But we all know all real estate is local, so let's dig in. The 20 largest markets were up 5.1%, which was unchanged from August. Top gainers continue to be Seattle, Portland, and Denver, which are all taking the runoff from people moving out of San Francisco. All in all, 7 cities reached new price peaks. Adding to those 3 are Dallas, Boston, Charlotte, San Francisco. Markets hardest hit by the housing crash, that's Miami, Tampa, Phoenix, and Las Vegas, have seen big price gains but are still well below pre-recession peaks. Now, here's a big caveat. All these price gains were recorded before mortgage rates shot up in November. The average rate on the 30-year fix jumped from 3.5% to around 4.25% today. We are already seeing a drop-off in the number of people looking for homes and requesting showings that, according to Redfin, prices always lag sales, but no question, higher rates give buyers less buying power. For Nightly Business Report, I'm Diana Olick in Washington.
And a Fed official today said that the case has strengthened for an interest rate hike since the central bank's last meeting. Federal Reserve Governor Jerome Powell said the economy is growing at a healthy pace. Inflation is gradually moving higher, and the job market is strong. Powell also warned that moving too slowly to increase rates could mean that policymakers would have to catch up and raise them at a faster pace to keep the economy from overheating.
Stocks resumed their climb today, helped by a string of economic reports that came out, and we just talked about, with the major indexes closing near their all-time highs. But a decline in the price of oil pressured energy stocks. That capped the day's gains. The Dow Jones Industrial Average advanced 23 points to 19,121. NASDAQ added 11. The S&P 500 was up nearly 3 points.
The Trump administration's cabinet is starting to take shape. Congressman Tom Price, an Obamacare critic, has been picked to be the Secretary of Health and Human Services. More on him in just a moment. Elaine Chao, the former Labor Secretary under President Bush, is reported to be the new Transportation Secretary. And private equity investor Wilbur Ross, who is reportedly being considered for Commerce Secretary, was at Trump Tower today. Take a listen.
It was a good enough meeting. They gave me a proper rain hat. Thank you.
Shall we take that as confirmation that you're going to be Commerce Secretary?
Talk to you later.
John Harwood is outside Trump Tower in New York City. Good to see you, John. let's start with Ms. Chow. She will play a crucial role in shaping the president's-elect big infrastructure agenda, and she's no stranger to Washington. Tell us more about her.
Well, she's been around in Washington a long time. As you mentioned, she served as labor secretary under President George W. Bush. She's married to Mitch McConnell, who's the Senate Majority Leader. That serves only to underscore Donald Trump's ties with the Republican Congress, just like Tom Price does. One potential conflict she may have is with her family's shipping company. Her father founded and her sister now runs a shipping company. That's one of the issues that's under the purview of the Department of Transportation, but I would expect an easy confirmation for Elaine Chao nevertheless.
All right, and now moving to industrialist and the turnaround artist Wilbur Ross. He certainly knows about steel. He knows about manufacturing. He will probably be involved in renegotiating trade deals, but his business interests could pose conflicts, no?
Well, exactly. And the issue I just mentioned with Elaine Chao, of course, it's an issue with the president-elect himself, Donald Trump, not the least of which is the hotel he has in Washington that foreign dignitaries are now saying they're going to stay in. So, yes, the business interests of Wilbur Ross range across what the Commerce Department oversees, and trade, of course, is one of the things. He's been very critical of trade deals like Donald Trump has, and so you can expect very close attention to the overlap between his investments and the new stance that the administration is going to take.
Before I turn you to Secretary of State, the New York Times just reporting late this evening that Steve Mnuchin may be the Treasury Secretary. Do we know anything more about that? There were several candidates, but he's been the front runner for quite a while.
That's right. He's been the front runner. He's been the expected choice. There's been talk of others, from Jeb Hensarling, who's the Financial Services Committee chairman in the House of Representatives, John Allison, the former chair of BB&T, but Steven Mnuchin, former Goldman Sachs partner, active in fundraising for Donald Trump during the campaign, has been the expected choice. And I was told earlier today that there is a good possibility that that could come this week, if not tonight.
All right, John, thank you so much. Get in out of that rain. John Harwood in New York City.
I will.
Now to Tom Price, whom Donald Trump apparently has picked to be his top health official. In that role, he will run the department that oversees the Affordable Care Act. And as Bertha Coombs reports, it's no secret that Price wants to make big changes to the health law.
Six-term Georgia Congressman Tom Price is an orthopedic surgeon by training, and as House Budget Committee chairman, he was a key opponent of President Barack Obama's Affordable Care Act. As Donald Trump's pick for Health and Human Services Secretary, he'll play a key role in enacting the president-elect's vision to repeal and replace the ACA.
He's a known entity. He's had leadership positions, House Budget Committee, also in the conference. So as far as Trump's major idea on health care, repealing and replacing Obamacare, Price will be the one to do that.
Price's own prescription for replacement includes measures to get insurers to bring down plan costs, like selling across state lines. For consumers, he supports age-based tax credits and health savings accounts rather than the ACA's income-based credits. While it may bring down costs, according to a RAND study, those GOP proposals would not extend coverage to as many people as the ACA did.
We found that, we can get more people insured than we had in the pre-ACA state of the world, but we've seen only, 2 to 9 million people more, not the full 20 million people more.
Part of the reason is that the Republican plans roll back the expansion of Medicaid under ACA and would restructure the program through block grants to the states. Analysts say that would give more spending power to states, but less federal funding. States would likely continue to turn to insurers to keep costs under control, but it will put pressure, most likely, on hospitals.
It does appear to be a more aggressive way to get costs under control, and hospitals being at the top of the food chain. It is the highest level of most intense healthcare spending. They would be hurt. It would be a negative for hospitals.
But as HHS Secretary, Price would also have discretion to roll back some regulations that are now pressuring hospitals and doctors under the ACA. Already in Congress, he has pushed for easing deadlines on providers to meet new electronic health record requirements. For Nightly Business Report, I'm Bertha Coombs, New York.
Let's turn now to Sherry Gleed for more on Tom Price and the changes we could see to the existing health care laws. Sherry, thank you very much. She's a health care policy expert, currently dean of NYU's Robert Wagner Graduate School of Public Service. What would Tom Price do? How would he tinker with or replace Obamacare?
Well, Price would be Donald Trump's main advisor as Congress decides how to replace Obamacare, and he's put his own proposal forward. So he would be the architect of the compromise, presumably, that Trump would negotiate with the Republican Congress around how to replace Obamacare. He'd also be responsible for implementing the regulations around whatever new legislation was passed and for implementing whatever aspects of the Affordable Care Act remain in place.
Bertha Coombs, in her piece, just mentioned that she thought, given what we know of what's going to be proposed, that the hospitals would be big losers and maybe the insurance companies. Do you agree with that, given what we know so far?
I think that's right. I mean, I think hospitals are losers on a number of fronts here. One is a lot of people who currently have insurance will lose it, and many of the people who will lose it will be the least healthy of those people who now have insurance. Price's plan is more favorable to young, healthy people than it is to older, sicker people. And of course, hospitals are going to wind up bearing the brunt as in terms of uncompensated care. That will also be true with respect to Medicaid cutbacks. He's also not in favor of a lot of the delivery system reforms that have really been pushed by the Obama administration, and hospitals have invested a lot in those reforms as well.
He has. I'm sorry.
Go
I was going to ask you a question about his tax credits that he would give to people to buy insurance in the private market. They're based on age. In other words, you get more the older you are, and presumably the more expensive your insurance would be. They begin at $1,200 a year. Talk to me about that. You can't buy much insurance for $1,200 a year.
That's right. I mean, these subsidies are much lower than the ones that are available, especially to lower income people under the Affordable Care Act. So these tax credits would really only help relatively high income purchasers of coverage. In fact, I think one of the concerns here is that they would essentially displace private money. People who could afford coverage on their own would find that $1,200, right, an attractive bonus. But it's not really enough money for somebody who couldn't afford coverage in the first place.
What about employers who provide insurance for their employees, employer-sponsored plans? How will they be affected?
So Price's plan essentially plans to fund those tax credits by rolling back the tax treatment of employer-sponsored insurance. It's kind of like the Cadillac tax in the Affordable Care Act that's really drawn a lot of concern and has been postponed for a long time. But the proposal that Price has is actually much more draconian, actually, than the Cadillac tax. It actually comes in at $8,000 per person. So if an employer is spending more than $8,000 on health insurance for one of their employees, all of the rest of the cost of that health insurance would become taxable to the employer.
So they lose that as a deduction, as a write-off, right?
Exactly.
Sherry, thank you. You've been really helpful. Thank you. It's a complicated thicket, and you've really explained it well. You appreciate it. Sherry Gleed with NYU's Robert Wagner Graduate School of Public Service. Thanks again.
Good night. Thank you.
As we mentioned a bit earlier, oil prices were lower today on reports that OPEC members are struggling to agree on a production cut that the group outlined back in September. Domestic crude tumbled 4% just a day ahead of the official meeting. And as Steve Sedgwick reports from Vienna, the stakes are high.
Late Tuesday in Vienna, and still a lot of question marks about whether OPEC, which controls up to 40% of global oil supplies, will actually come forth with the deal which they promised us from Algiers in September, i.e. to cut production by up to 1 million barrels a day. It's the old questions that still remain. Will the likes of Iran, will the likes of Iraq get an exemption, or will they be forced to take a cut as well in order to get a unanimous decision throughout the grouping? I spoke to one oil minister, the minister for the UAE, and he said it needs to be unanimous. There can't be exceptions to participation in a round of cuts.
The expectation that if we agree on something, we would like to agree on something that is sustainable and that benefit everyone, and also get everyone need to be participating one level and or form. But don't ask me how, who, and when before we meet.
And of course, the concern is that the kingpin of OPEC, Saudi, will just walk away if they don't get cuts from all members, including Iraq and Iran. These are some of the big questions that remain for the market, with the oil price falling around 4% on Tuesday as traders got very nervous about the prospects of a cut. Where the oil price will go if there isn't a cut, well, some are talking us down to the low $30 a barrel level, and if there is a cut, some are saying we could go as high as $55, $60 a barrel later this year, or perhaps early in 2017. For Nightly Business Report, this is Steve Sedgwick in Vienna.
Still ahead, stop the presses. Why demand for real news is increasing as fake news spreads. Senator Elizabeth Warren is criticizing Wells Fargo's decision to seek arbitration for customers affected by its fake accounts scandal rather than allowing them to sue. In a Facebook post, the senator said Wells Fargo's promise to treat customers better in light of the scandal is meaningless as long as it insists on arbitration. As we reported last week, the bank asked a court to uphold contract clauses that mandate arbitration, something commonly used by financial firms to protect against litigation.
The nation's commercial banks and saving institutions reported record profits in the third quarter. According to the FDIC, revenue and net income increased from a year ago, loan balances increased, and asset quality improved, and the number of unprofitable and problem banks fell.
After years of falling numbers, the New York Times is seeing a surge in subscribers, both print and digital, since the presidential election. For years, print media more generally has suffered from a decline in readership, and these better numbers come as fake news spreads across social media. Julia Boorstin has our story.
News organizations have seen a surge in subscriptions and stock prices. New York Times shares are up more than 16% since Election Day, while shares of both USA Today parent Gannett and Tronc, which owns the LA Times and Chicago Tribune, are up by double digits. And though Donald Trump has repeatedly called the New York Times failing, tweeting, "Wow, the NY Times is losing thousands of subscribers because of their very poor and highly inaccurate coverage of the Trump phenomena," New York Times CEO Mark Thompson tells us that the paper has added 132,000 subscribers since the election.
Subscriptions have been up 10 times on the same period last year. So we're seeing a 10x net increase in subscriptions. So, far from failing, we're seeing a remarkable response by new subscribers who like the kind of journalism, independent, without fear or favor journalism that the Times represents.
And the Times isn't alone. Tronc's publications saw an average increase of 29% in paid digital subscriptions during election week, with one of its publications, the LA Times, growing its digital subscriptions 61% during election week. The journalism at publications such as the New York Times and the LA Times stands in contrast with the spread of fake news, which Facebook and others are trying to crack down on. Many say the spread of fake news on social media influenced voters this campaign season.
In fact, a BuzzFeed study found the top 20 fake news stories generated more engagement, likes, and shares than the top stories from major real news outlets, including the New York Times.
Social media benefits legitimate, professional, fact-check journalism as well. We're very, very present on Facebook and Twitter and other social platforms. But clearly it's true that these new platforms, these relatively new platforms, make it possible for almost anyone to publish almost anything they want.
As for Mr. Trump's repeated threat that he's going to sue the New York Times and change libel laws, Thompson says Mr. Trump told him in a meeting last week, quote, "I don't think you'll have anything to worry about." For Nightly Business Report, I'm Julia Boorstin in Los Angeles.
Tiffany posts its first sales increase in 2 years, and that's where we begin tonight's Market Focus. The luxury jeweler topped analysts' expectations thanks to an increase in foot traffic in its Asia locations. The company, which has a flagship store right next to Trump Tower in New York City, said traffic there has been negatively impacted due to the ongoing road closures and the protests. But despite that slowdown in customers, Tiffany maintained its guidance for the year. The shares rose 3% to $80.60. Industrial gases company Praxair wants to restart talks with its rival Linde regarding a potential tie-up. The two companies were in merger talks earlier this year, but they fell apart after the parties could not agree on where the headquarters should be located. Praxair shares rose nearly 3% to $122.18.
Shares of Shoe Carnival got battered today following lower results after the bell yesterday. The shoe retailer attributed those disappointing numbers to weak demand for boots and other seasonal items. The company also cut its earnings forecast for the year. Shares down more than 13% at $26.15. And the business software maker Splunk, yes, that's its name, Splunk, beat analyst estimates for profit and revenue. The company also gave earnings guidance above forecast. Shares initially rose in after-hours trading, but they went Splunk in the regular session, down a fraction at 57.38.
There were nationwide demonstrations today. Low-wage workers took to the street to demand higher pay and health benefits. The protests were part of the union-backed Fight for 15 campaign. It's first since Donald Trump was elected president. Uber drivers in more than a dozen cities participated as well.
Some workers at Chicago's O'Hare Airport also demanding $15 in hourly wages. Janitors, baggage handlers, cabin cleaners, wheelchair attendants went on strike as part of a broader day of disruption planned by the Fight for 15 activist group. The strike was not expected to affect flights in or out of the nation's second busiest airport.
Coming up, hitting the road. What's behind the resurgence in sales of RVs?
Massachusetts is adopting strict background checks for Uber and Lyft drivers. The new rules are the toughest in the country, and they go into effect next year. Independent drivers will have to undergo a state criminal background check as well as a biannual commercial background check conducted by the companies.
New numbers from the RV industry show Americans have rediscovered the great outdoors. In fact, RV sales this year are the strongest since 1976. Phil LeBeau tells us why demand is climbing.
RVs are on a roll. From campers to motorhomes, Americans are snapping up these travel rigs in big numbers. This year, the industry expects to sell almost 420,000 RVs. The seventh straight year, sales have increased after bottoming out in the recession. What's driving the resurgence in sales? Well, the stronger economy combined with low gas prices and attractive interest rates are convincing people this is the time to buy.
When you think about the accessibility of being able to find an affordable rig, and not only that, the quality of the product is at an all-time high. And these are really the glory days of the RV lifestyle.
The rebound in RVs is welcome news in places like Forest City, Iowa, where Winnebagos are built. In 2009, when Winnebago sales slowed down, unemployment in that area jumped to more than 13%. Today, thanks to the RV boom, unemployment has dropped to 4%, well below the national average. Ironically, the number of Americans camping is roughly the same as it was just a few years ago. So why are new campers and trailers in demand? Partially because many people held onto their old RV during the recession, and now they want a newer model.
There's also a shift in the people who are buying a camper or motorhome. They tend to be younger and more active, making hitting the road in an RV more popular than ever before. Phil LeBeau, Nightly Business Report, Chicago.
I've got one.
You love it, right?
I do. I really love it. It's so much fun.
We
The
saw
kids love
so
it.
many people. When we were out west this summer, we saw so many people
Yep.
RVing. It looked like fun.
I can drive it. I just can't back up. That's Nightly. I can't. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. And we want to remind you that this is the time of year your public television station seeks your support.
And I'm Tyler Mathisen. Thanks so much for your support. Have a great evening, everybody. We'll see you tomorrow.